when we talk about the price of ETH, can we open it with that tweet that I shared in the DeFi Podcast channel?
Which one was it?
Oh no, they're trying to turn New York into Ethereum.
Since when is Ethereum communist? I think that's like.
Oh, dude, it's 100% communist. Come on, man. Like, just look at the art. Hello, everyone. Welcome back to the DeFi Podcast. It's been an exciting week. I'm glad to have all the regular guests back today. Rhett, JF, Jared, how are all three of you guys doing?
Good. How are you?
Great.
That was super awkward.
Rhett,
Can we start
Rhett,
that?
No, we're not starting it over. This is perfect. We are awkward. This is how we are, Rhett. Rhett, why are you wearing is it cold where you are? Why are you all bundled up? You just got good AC. What's going on?
It's actually really warm, but this was at the top of my clothing stack and I was in a hurry. So that's what we ended up with. It's like, what is it? Probably 80 here right now.
Okay. All right. Now that is cool by New York standards. Okay. Consensus is happening right now, but you can just not go to conferences, I heard on X. So we're not really there. We're conferenced out for a little bit. So we're going to talk about a bunch of topics today, just kind of wandering across what's happening in crypto. But first, let's do a very quick market update. So it seems like maybe we have avoided a nuclear war in the Middle East, which is good news, or any type of war, hopefully. Knock on wood, Jesus. S&P is at all-time highs, which is kind of nice to see. But those animal spirits have yet to kind of trickle down to the crypto markets. Nothing is really doing well in crypto, with the exception of a Coinbase stock, which broke through all-time highs, and Circle, which is still doing really well. I think it's down from the highs. It's down like 25% from the highs, but it's still like 7 or 8 times where it was in the IPO a couple weeks ago. So those two are doing really well, showing that there's definitely appetite from the TradFi and retail markets to buy crypto assets, but they haven't really bought our bags yet. So we're still kind of waiting. So everyone hang in there. Don't worry. It's coming. Not financial advice. Do your own research. Trump this week had a big press conference in front of NATO, and part of it, which was really interesting to me, was he was railing again against Powell, kind of calling him a low IQ individual for not lowering interest rates, and then he signaled to the market yesterday that they're going to announce a Fed chair earlier than the market expects, which we were talking about a few weeks ago, maybe by September. And obviously, he's going to probably nominate someone who's going to be a bit more dovish on interest rates. I think JD Vance actually posted an interesting tweet on this. He kind of said it a bit more eloquently. He was like, look, the Fed lowered rates twice last year going into the election, and inflation was higher, right? So why aren't they lowering rates now? Like, it doesn't really make sense. And, the Fed might argue like, hey, we are, there's a lot of uncertainty now because of the tariff stuff, but I don't know, the Fed and maybe definitely the media wants you to think that all of the brunt of tariffs, whatever end up materializing, is all going to be borne by U.S. consumers and nobody else, which I don't think that's going to materialize. So as we go into the end of the year and, tariffs impact on inflation comes through in the data, which hopefully is not severe, and then the Fed chair gets announced, it's hopefully going to be a little more dovish. All season will commence. This is kind of my hopium. Anyway, that's my quick market update. What are you guys' thoughts on the markets where we are right now?
I do think if interest rates fell, that it would have a really positive impact on markets. I agree with you there. I also think that is some strange behavior. As far as tariffs, I'm kind of hoping that the whole thing results in like lower global tariffs. Like if this ends up just resulting in new negotiated trade deals where both sides are taxing less, then that's a good thing. Even if it does result in higher tariffs, I think it's unlikely to be persistently inflationary. It probably is like a one-time price shock, where if there's like a 30% tariff there wasn't before, assuming our consumers bore all of it, which is not going to be the case, but if they were, it would cause maybe a 30% price hike one time and then flatten off from there, which is very different than persistent inflation. As far as who bears the tariff, it all comes down to some dynamics of, elasticity of supply and demand. It may get borne more by the producer or more by the consumer, depending on the nature of the good. So it's kind of hard to tell exactly how that will end up playing out. Anyone who thinks they know, I think, is lying or overconfident. So yeah, that's my quick thought on the tariffs. On stock market versus crypto markets. The crypto markets seem to be lately a lot more quick to respond to geopolitical events. The Iran stuff with Israel, the crypto markets immediately took a big hit, and then they've now partially recovered. I think some of why they take that as they're considered like a more risk-on asset. But I think part of the issue is when some of these things are happening over the weekend and crypto is like the only thing you can trade 24/7, it's an easier way to express the bet. So I think there's a little bit of that there. So I kind of think that crypto will fully recover from like the Iran stuff and be back into bullish territory. It's mostly already retraced, but there's still a little bit of a discount from pre-Israel Iran.
It'd be an interesting moment to see the Fed, just lower interest rates. I'd like to see that and sort of see the impact on the markets. Kind of love how the president's calling that out. It's an interesting happening.
Well, dude, I imagine your trading view, JF, if you have it, you know how people have like 8 charts up. For you, it would just be like 8 charts of Tesla stock. Like that's basically how you're tracking the stock market is just what is Tesla doing, you know? So, I mean, I don't think that really does that affect the price of Tesla stock at all?
Not really. I mean, maybe. I mean, like Tesla's sort of like, if you're a Tesla investor, you're a little bit like a crypto investor. So you're used to a lot of up and downs. And, there's always going to be.
Oh, I thought you were going to say you feel like you're in a cult. Yeah, but okay. Yeah.
Well, I mean, there are some similarities, right? Like it's a bunch of people who sort of think that they understand something that the rest of the world doesn't. And I think that's probably right. It's like picking, the difference that you're picking one specific flavor versus like crypto. It's just, it's a whole market of different plays. But, sorry. Do we want to get into Tesla now or do we want to trace back to this later?
Let's talk about Tesla now. Yeah. I mean, look, the short version of it is like this, right? Like, I love Elon Musk. Tesla's awesome. But what is it trading at? Like basically roughly $1 trillion valuation. And you're texting me all the time to buy Tesla. I'm like, dude, how much higher can this thing really go? So make the case for why this thing can actually go.
Right. Okay. I mean, there's really 2 components to it. There's the robotaxi business. And you can think about a car now that, maybe you're making a 10 or 20% margin on a car that you're selling for $50,000. So let's say you're making $10,000 profits. If next year you could take that same car, you could put it on the road and it can become an Uber that works like almost 24 hours a day. You could potentially, get $100,000 a year of profits from one car, right? Like just roughly. There's different ranges. You could, maybe it's 50, maybe it's 125, but there's a high level of profitability that you can get from that same vehicle forever per year.
Okay.
Which is like 5 times the price which is 5 times the profit margin of the current product, right? So,
okay. But I have a question about this because I honestly, I haven't had that much experience with Teslas myself. I've driven a couple, that's it. But I see a lot of conflicting stuff online about like the auto driving is actually really good or the auto drive is actually terrible. And I don't know which one is the truth,
Okay. So there's 2 approaches to doing self-driving. There's the LIDAR pre-mapping approach, which requires a lot of really expensive equipment and it requires a lot of human oversight. You really have to have like updated maps. Like essentially you're telling the computer, okay, here's like a grid of the city, which you have to keep up to date all the time. Because if that falls behind, the car is going to have issues, right? Like, so like it requires a lot of maintenance. So you have to, you're essentially, it's not really AI. Like at least it's not full AI the way I think about AI and what AI should be. There's a lot of human code in there. And there's a lot of, I don't remember the number of sensors, but there's many like expensive LIDAR sensors, which are essentially lasers that are like beaming out on the street and getting data back, just to map out like, where there are hard things. So essentially you have software running and the software is telling the car, don't run into hard objects, right? And then try to follow this map. So it's a very clunky, not scalable process. Whereas if you think about the Tesla FSD process, it is now end to end AI. So there's no human code in the full amount of code that the car is using to drive the streets. So It
What
is,
do you mean
and
human code? What do you mean when you say
so
human code?
so initially when they started doing FSD, people were writing actual code, right? Like I think it was in C, and they were telling the car how to react to certain things, and they were like parts of it was AI models stitched together by like C++, or something like that, right? Today, the whole model is like one model that has just been essentially trained by watching human drivers and correcting and weights. And maybe Rhett can actually speak, more to this than I can at this point, but essentially you have an end-to-end AI trained model. So it's real AI, whereas the Waymo approach just isn't. So TLDR, when you turn the switch on, and you sort of open this up when the system is fully ready, you're going to be able to see Tesla deploy in like many, many cities very, very quickly and many jurisdictions. And you could cover the whole of the United States. Whereas, with Waymo, you would have to train, you need a huge number of engineers, and you need, it's just impossible to like cover, let's say, all of the US.
Okay,
like it will take forever to scale.
Let me oversimplify. So are you saying that whatever auto driving Tesla has requires less manual intervention of the code from human coders, and also does not require like some updated map to be constantly updated, from like some, I don't know, like Google Map stuff. Like basically they train cars on a bunch of data, and then they can put it anywhere and it can just drive without human intervention in the code and updated maps.
More or less. And then when you're retraining the FSD model, in Teslas, you're just essentially retraining like the weights and the way the model works, right? So it's like retraining an LLM, right? So you're improving the model, but you're not actually writing lines of code, if that makes sense.
Okay, yeah. So a few thoughts.
Right. I feel like you can add to this. Yeah.
So first on the question, how good is the Tesla's full self-driving? I have been driving a Tesla since 2019, like early 2019, and paid for the full self-driving package and have used it every time I get in my car from then till now. So that's like 6 years, right? The difference from then to now is drastic, like very significant. And even recent improvements are like notable improvements. And that said, I don't have the newest FSD hardware. I have hardware 3. You need hardware 4 to have the latest and greatest. So I'm running what's called version 12. There's a version 13 that I've heard is like night and day different from version 12. But even what I use, I can do a 4-hour drive and basically never touch the wheel. And even if I'm in like a lot of traffic, crazy. Yeah, if I'm in a lot of traffic, it is really good at being an assertive driver without being annoying. Like it's like, oh, that lane's moving faster. I can move over. I'm not cutting anyone off, but I'm also not like overly cautious and unable to change lanes. It's like a really high quality, assertive driver. So the difference is really significant in the quality. To JF's point, I think there's a couple of major advantages in my view. One, this is a generalizable thing. So, once this is working really well, you can deploy it basically in any city. Waymo is not. And so Waymo, to expand to a new city, is going to take a lot of effort. And you'll notice that Waymo first started doing full self-driving, like driverless robotaxis, literally like 5 years ago in Arizona. And from then to now, over the last 5 years, they've expanded to like 2 more cities. Right? Isn't that they're in only 3 cities?
Like
is that right?
In San Francisco, yeah, I think so.
They're launching in Atlanta soon, but yeah.
The other bigger issue, I think, is there is a really significant cost difference between the two. Yes. And even in the absence of Tesla, Waymo in its current form, I think, is unlikely to be price competitive with Uber. Because one Waymo
already
vehicle,
it's the same or higher price is what my friends tell me, which is kind of surprising. Yeah.
Well, one Waymo costs like $200,000. LIDARs are expensive. They're a lot less than they used to be. And, but they are still expensive. They're more prone to breakage than something like a simple camera. And so you have like, okay, you have a $200,000 Waymo, or you have a Tesla that maybe, costs Tesla 50K to build. So there's roughly a tenfold price difference in the car itself. So it's easier to
And
generalize.
then in the
Price
engineering
of cars
required
very
to launch
similar.
in a new city, I think you have a tenfold difference, probably, like roughly, right? Like it's probably an order of magnitude on the car cost difference and on the engineering required to deploy in a new market. Does that sound right?
Yep. So my view is the biggest hurdle is going to be regulatory, but in the absence of regulatory issues, Tesla could have global FSD rideshare, like robotaxi services, within like a year or two. The biggest challenge that Tesla will have by far, I think, minus regulatory, is just having enough like charging infrastructure so that those robotaxis can keep, driving enough. But that's not like an insane challenge, not compared to the challenge of Waymo. So I think there is a substantial difference there. And to JF's point, I think that this could be one of the world's biggest and most profitable markets, potentially. And they could end up being a winner take most in that market. So I agree with you there. And then the other piece that you haven't spoken about yet is I think that these like humanoid robots are an even bigger market than that. And there are not any other like credible competitors there yet, other than like some Chinese companies. But like, you have Boston Dynamics or whatever that's been building robots for years, but they've never gotten to a point where they could like mass produce them. Like they sell a small number of them to the military at like 50 grand a piece, and they can't mass produce them. They're not the sort of company that's like really made to be able to mass produce. So it's like, okay, Tesla's basically, I think like a credible possibility they become the winner take most in the robotaxi business, which could be one of the most profitable industries in the world. And then they also are the only like high quality, credible competitor in this new emerging humanoid robot space. And so if they're one of the biggest winners there, each one of those could be a multi-trillion-dollar business, I think.
Can I go back to, before I start talking about humanoid robots, I just want to go back to the car play. I don't think most people understand, but the utilization rate on a car is like 4%, meaning 96% of the time it is like sitting around doing nothing. So just think about the economy at large. If tomorrow morning you could take every car and give them 50% utilization rate or 60 or 70%, right? Like there's going to be some downtime for sure, but let's say these cars are like running all the time. This changes the landscape of cities. We need way fewer cars. And then what can happen to the cost per mile to get from point A to point B is actually pretty drastic. So if you look at the input costs on a car, first of all, you have the depreciation of the car. And a Tesla can probably drive 1 million miles without much maintenance. Teslas don't require maintenance because it's an electric car. So the cost of depreciation per mile goes down drastically. The second cost is, let's say, a driver. The cost goes to zero. The third cost, let's say, is fuel. Fuel goes almost or gets cut by like 2/3. And then the other cost is insurance. Insurance goes to almost zero because we have like perfect drivers. So now you're talking about, let's say it costs, $10 or a couple dollars per mile to ride in an Uber. Maybe you're now talking about like 25 cents. I don't have the exact figures in front of me, but like you're probably looking at like an order of magnitude difference on the cost per mile to get a human from point A to point B. So this really just like changes the economics of humanity. And then if you look at humanoid robots, Elon said this first, and I think he's right, that essentially the economy is labor. Like everything in the economy is labor. The limiting factor on having a bigger economy is labor. If we had 10 times more humans, we would have an economy 10 times bigger, right? Like essentially, it's not like a pure linear thing. Like it might actually go up faster, or maybe you'd be limited by some capital growth because you don't have enough like land or things like that. But, the limiting factor is essentially labor. And once you get humanoid robots, you remove the limiting factor and you don't really have to pay the robots, right? Like they're not going to go home and negotiate a salary, hopefully. So that means that, you multiply the economy by 10, but then you don't really need to share that with anyone. So that means that every human is living a life that is 10 times richer, right? On average.
One quick point going back to your cost per mile. The diff is so drastic that I think there's likely going to be a lot of induced demand. And so it's not like, Tesla could take all the revenue Uber's currently taking. they could take that plus a very large increase because a ton of people who currently drive themselves rather than Ubering would robotaxi instead of owning a car. And then you can also probably replace a lot of delivery vehicles and things with these. So the size of the market could grow a lot because, the economics are so drastically different.
It's funny, actually, if you guys ever follow this guy, Dean Kamen. Do you remember this guy, the guy who invented the Segway? He kind of said some of these similar things back in like the late 90s, early 2000s. Like he was like, well, the thing that's interesting is like, he's like, look, we have these cars. Cars are like 3,000, 4,000, 5,000 pound machines. And they're carrying around, 150, 200. A lot of times it's like one dude in the car. It's like a 4,000 pound machine carrying a 150 pound guy. Like it doesn't really make sense, right? But obviously, like you build these cities and have these roads and have entire industries, it's hard to kind of restart the whole thing and replace everyone with those dorky segways. Like it just doesn't work, right? But maybe this is kind of an indirect way of getting at it, right? Like the cars are on the road more, so you need less cars. There's less accidents, so that the cars can be smaller. Like like over time, anyway.
Parking lots can become parks.
That would be awesome. Yeah, that'd be incredible.
Yeah, and I think everyone is focused on AI right now, and everyone's bullish on AI, but everyone's thinking about AI in terms of software and like sort of like an online application of AI. But I think the real market for AI, which is so the problem with LLMs is that everyone can sort of like compete with each other, right? So it's going to be hard to charge a really big premium because you're Google and you have, just a slightly better LLM than OpenAI, right? So the value that can be captured by current companies in the AI market is kind of small because it's just very competitive. But when you go to real world AI, which is going to be a huge market, potentially bigger than sort of like this online AI, if you will, I don't want to say where there's more value captured because having just like just having AI think is like just hugely valuable to humanity. But let's say you're going to go towards this real world AI and there's only really one player that's able to pull it all together, like Apple did, like just sort of like vertically integrate and give you a final product that actually works. Not only is this like the biggest market ever in the history of humans, but it's also going to be probably sort of like captured to a high degree, like let's say 50% or something like Apple did, by one company. So the value of this company is really, really hard to actually, model. But every time I model Tesla, like I just come up with numbers that just make no sense and I don't even want to tell people. And make no sense in a way where like it's too high. Like, so if you model this potential, like the numbers are hard to wrap your head around.
Okay, so I've been listening, and I don't want to crap on your parade a little too much.
Here it comes.
Okay, I think the claim that a Tesla can drive 1 million miles is sort of true if you discard the fact that like the car is worth nothing compared to the battery, right? And on average, the average battery drives anywhere from 150 to 300,000 kilometers before it starts experiencing like serious degradation of the actual capacity of that battery. So I think that basically means that, the cost of replacing the battery basically means you might as well just replace the cost, like the car itself.
I agree on that. Like the battery is one of the challenges where getting a battery that can actually like keep up with this distance is hard. So that's a challenge that probably isn't fully solved yet.
Yeah, I mean, when you consider like, okay, fine, you launch in a few places where the climate is favorable to battery cars, but once you go into like coastal areas that have like salt in the air, everything rusts like crazy. You're going to have more degradation in those places. If you go up north, where you have actual winters and the duration of a battery doesn't last very long because it's in freezing temperatures, you're also going to have issues with the longevity of your batteries there. So I think it's fine if you're in certain areas where it's very easy to just maintain it long term because they don't have like very bad climate factors that cause batteries and parts to degrade very quickly, but in other places, your cost of maintenance is going to go up pretty significantly. The other thing that I'm wondering is like, okay, so let's say you do go out and you completely capture the market. You've got all these, millions of cars driving around. Nobody needs a car anymore unless they're in, a rural area or not in the middle of a city. Wouldn't you just kind of drop the cost per ride to the point where it actually becomes maybe a little bit more? Like, I understand you can say, like, at the cost
it's
of
going
your
to become a
average
competitive
Uber
market
ride
at some
right now.
point. Yeah. Listen, like, I think initially when this happens, Tesla's going to be able to charge a massive premium and make a lot more money than competitors. And the question is, how long does that last? Does it last 2 years, 5 years, 10 or 20? I think it's probably 10 to 20. And then I think as soon as you start seeing profits diminish, at some point the robotaxis are going to, the humanoid robots are going to be coming in, and then you're going to have a second wave of insane profitability. So, yeah, nothing's perfect and there's going to be some downside here and there, but I just, if you model this thing long term and they're successful at doing those two things, that's really the big question is, are they going to be successful at launching a car that can drive itself? That only costs, $10,000, $20,000 to manufacture, which is what the RoboCab is probably going to cost. And are they going to be able to launch a humanoid robot that's able to do something that no one else can do, or they're able to build it at a much cheaper price, or it's like just better. Like, look, there's going to be competition, but I think it's clear to me that Tesla's probably going to be the Apple of the market. And just look at the way Apple pulls in like most of the profitability of the market. Everyone else competes and sort of is always like a couple years behind. I just think that's how that plays out in the biggest market the world's ever seen. So
I think that's important. Probably fair to say. I don't significantly disagree with you. I just think maybe the targets, as usual, are probably a little bit overstated. I think the other thing that makes it a little bit of a, it's not much of like a numbers game. It's more of like the ethical question of what do you do when your car market and your robotaxi market has destroyed like labor for 80% of people who live in your country. I think that
everyone has to become a podcaster like
poses,
you. And
that poses a question that's a little bit harder to answer than what is the valuation of this company going to be.
So a couple of quick thoughts here on the batteries. So the battery longevity is getting better. There's been quite a few breakthroughs there over time. But even as it now stands, the battery just kind of very slowly degrades and has better longevity than people realize. So I've had my Tesla for 6 years. It has like 160,000 miles on it, and I haven't had noticeable battery degradation. What has happened in that 6 years is there are way more superchargers, and the superchargers charge you much faster. And so, especially for robotaxis that are just driving around town, even, over the course of, let's call it 300,000 miles or so, you end up, say, cutting the battery life in half, which even that I think is aggressive from my own experience. Well, now you just need to charge it a little bit more often because it's driving around in a city mostly. So it's like, okay, it still has 150 mile range. It can do a number of rides and then stop by an ultra fast supercharger. So I don't think that's I personally don't think that's like the biggest challenge, and it's actively being solved. But I think maybe you're right, Jared, that it is likely to be a little bit worse in coastal cities, or what I think about more with places where it snows a lot is how they deal with like blizzard conditions more so than the battery longevity. The battery longevity is still a little bit of an issue there, but again, if you have superchargers everywhere and they're very fast, you just need to stop by the charger a little bit more often. To me, that's not a huge deal, but the road conditions might be harder to deal with, even though FSD is really good. The amount of challenges that like blizzard conditions pose to the cameras can be pretty high, I think. So I think that as far as the job destruction thing, one of my thoughts is basically, I'll believe it when I see it. So there was all these people freaking out about job destruction clear back when like tractors were being invented. It's like, hey, 90% of the economy is farmers and they're all going to lose their jobs. Well, they did because it's like low single digits % of the economy now is employed in farming, but then whole new industries formed. And that's happened every single time you've had massive job destruction. And I think for literally, longer than any of us have been alive, people have been predicting, well, this time there's going to be so much automation that, no one will have jobs. And then it's like, well, a whole new industry appeared and everyone just funneled into that. There's these really funny interviews I saw with 12-year-old kids in the 1950s, like black and white video saying, hey, what are you guys worried about for the future? And they're like, there's going to be so much automation that no one's going to have jobs. And blah, blah. And it sounds like you're listening to someone talking today. And, there was Bernie Sanders on Joe Rogan this week where he was talking about that. Like, this is such a big concern. This is going to be a big problem. And you're like, deal with the problem when it's a problem, if it's a problem. And my thought is it's unlikely to be a problem because every time this has happened before, new industries formed. We found plenty of other useful things to do. And I think of it more like, hey, this frees up labor to go do other valuable pursuits. Like the software industry would not exist if we didn't have good enough tractors to allow people to not all be farmers. There will be new industries that will exist that can't exist today because too much of our labor is required in these other industries. And those will emerge. We don't know exactly what they are. It's hard to predict, but they will almost certainly exist, that have every single time in the past. And for this to be totally different, it seems relatively unlikely. But if it happens, there's ways we can deal with it. And if it happens, there will be an enormous amount of abundance. And so we will have the resources to deal with it.
I think, there's a lot of things that are not, humans have a lot of problems. So freeing up labor can be kind of great, because I don't know, we'd like to get to Mars. We'd like to find cures for cancer. We'd like to have good customer service. That'd be great, at one point. So, if you free up 70% of the medial kind of jobs that are happening now, everyone can turn to these other endeavors.
Yeah. I mean,
there's definitely going to be some problems and rockiness along the road for sure. It's not even perfect, but yeah.
I agree with you guys 100%, but I also think about there's a 45-year-old guy who's a truck driver. If he no longer can drive his truck and make money for his family, he's not going to go cure cancer as his next job.
No, he's what that guy's
he's not going
to
pivot
buy
to working in tech.
No. It's very easy. That guy's he's going to go and buy a couple of Tesla, humanoid robots. He's going to start building out real estate for, whatever, because he probably is manual and knows how to do that stuff and knows how to charge robots and, manage a couple of guys to do a build out, right? Or he's going to rent them out, or there's going to be new industries altogether that come from this, right?
The funny thing is, so far it's
there's going to be some
opposite,
pain for some people, for sure.
So far, it's been the opposite of what happens if a truck driver loses their job? What's actually happening is more knowledge workers' jobs are more under threat, and truck drivers, plumbers, electricians, et cetera, those jobs are becoming more and more competitive. It used to be oh, you want to do well, go learn to code. Now it's oh, you want to go do well, go learn to be a plumber. So even those jobs will eventually be there will be automation that will help with those. But it's been so far the opposite of what almost everyone expected, is that the knowledge worker jobs, the software engineer jobs are getting not automated away, but you can do more with less. And then those real world jobs are becoming way more competitive. I think now more than any time in the last 20 years, is it a reasonable idea for someone to, instead of going to college to learn to code, they should graduate high school and go get a job as a plumber.
Yeah, get a job that doesn't scale well with technology, be a jiu-jitsu instructor or a plumber or something like that, where you need to have it scales with human, it doesn't scale with in any other way. Yeah.
But Rhett, do you think that this is maybe a reason for why it could actually be a little bit different this time? Because, if you look back 5, 6, 8 years, right, people who were losing their jobs in whatever field it was at the time, the common thing was learn to code, right? Everybody can learn to code. People make a lot of money learning to code. And then there was a massive influx of people into IT and tech and, these fields. There is a very large amount of people who do anywhere from the menial to advanced jobs in tech, which could very easily be replaced in the next couple of years once AI starts advancing. And then you add on to that the self-driving cars, self-driving trucks, more menial labor on the sort of like manual labor side of like, I don't know, you need to carry something, right? Robots are going to come in and take a lot of those. So unless we're talking about like niche meme coin creator, like the fields of jobs and job creation are going to get thinner and thinner over time. The more AI and robotics starts taking over these jobs that, the majority of the population are actually able to do.
Is it possible it's different this time? I think yes, but I think humans are pretty amazing creatures. We have an incredibly powerful computer in our head that runs on really low energy compared to, digital computers. And we are very, adaptable and able to learn and do new things and engage with the world in interesting ways. And I think the likelihood that we run out of useful ways to add value to the environment is low. And I can already see a few new things emerging where for LLMs to improve, they really need human feedback, and they especially need like expert data and expert feedback. And I think that one probably really high paid job of the future is just be a person who gives feedback and expert data to an LLM. Now, that obviously applies to some physicist to help it learn to be better at physics, but even like an everyday person can give new useful data and feedback to LLMs within their area of competence. And that's going to be really important for the LLMs to improve and then to improve our lives. And so I think that could be an enormous new industry. And it could feel like you're not even working, if you're just like walking around your daily activities, just interacting with an LLM via voice in a way that is giving it new information and feedback, and you just feel like you're kind of having a conversation with the computer and you're getting paid for that. It doesn't feel like work to you, but it is really useful to the LLM, then that could be great. And I think the amount of need there would be huge. I'm sure there's other things that I'm not thinking about that would be really useful, but so far LLMs and other kind of AI models, et cetera, tend to synergize really well with humans. And we still have a lot of value to add. So for those to continue to scale, I think humans will have a really useful role to play.
Okay, now for the hard question. How do we tie this into blockchains?
Right, yeah, it's supposed to be the DeFi podcast. We have to rename it, like you said in the chat, to the DeFi and AI podcast, or maybe just the Tesla, I don't know, cheerleading squad or something.
I mean, I do think like blockchain is future tech, right? And I think we're probably all bullish on it because we see where the world's going. We see that there's going to be a need for this. AI is just going to impact like this tech because it's sort of running in parallel. These are like two big developments, I think, in the world of technology and then in the way humans do things. So just being informed on AI in general, I think is good. And like just the idea that, Tesla's not a car company. I don't think it's ever been really a car company, or maybe it was at the very beginning. But it hasn't been that for at least a decade. It's an AI company. And yeah, I think it's the most important AI play that's happening right now that no one's really talking about. I mean, some people are obviously, but like, I don't think it's not framed in the way that it should be, and will be.
I think maybe the obvious way to tie in, all this AI conversation and blockchain is just to point out that blockchain is also like the economy of the future. So the next, 5-10 startups or funds that want to launch are probably going to want to do it on a blockchain. They're probably going to want to, give access to those tokens or whatever assets they may, want to get investment in. They're probably going to put that on a blockchain. And so, tokenizing access to a robotics company or maybe individual robots, it probably just one of very many ways that these things could actually be realistically tied together.
Yeah, like, dude, like when something new technology is available like this, it's like okay, for Tesla, right? The way I see it actually panning out, and I'll keep this short, make you wrap because I know you got to go, JF. But like, someone somewhere is going to be like, okay, in this certain jurisdiction or city, whatever, we're just going to have self-driving cars. Maybe they're all Teslas or whatever, and only self-driving cars. And they're going to do that for like a year, and there's going to be like 0 accidents. and no one's going to get hurt. And they're going to be like, okay, we may lose some jobs, we may be more expensive, whatever. There might be some things we got to change. But if you can how many people die in car accidents every day? It's some crazy. I think we're going to look back
something
in
like
40,000
a year in the US.
No, I think it's a lot.
Is it?
Yeah, you look globally, it's like a big number. I remember looking, it's like over 1 million people a year or something die in car accidents. Like if we could eliminate that, like that'd be incredible, right? So I think in 50 years, we'll look back and think, why we weren't, thank God we have this new innovation, right? And I think in blockchain, there's some similar idea, which is like people start a company. When you start a company, like you have to start plugging into fiat rails, and there's like friction there. You start a new company, you got to get a bank account, you got to get this, you got to get that, you got to send your money. Like and it doesn't necessarily have to be in the US. Maybe in the US it's fine, but like in a bunch of other places, like just plugging into financial rails is just going to be so easy with blockchain. It's going to just make sense, and that's where it's really going to take off.
A quick
on the stat, just looked it up. Yeah, so it's around 40,000 that die, but I think you're probably thinking about like just number of people who are like impaired because of car accidents. So there's a lot of people who survive car accidents, but they're messed up forever, right? So that's probably 10 times more, right? Just in the US.
Yeah, I think the two most common ways to die for people under the age of 40 are car accidents and suicide. The weird, negative side effect, if you can call it that, is that's also a big source of like organ donorship. And so it's obviously a good thing to remove those deaths, but you will see probably organ donor lists grow substantially unless we can figure out how to like manufacture kidneys for people. It's still, overall a good thing, but it's an interesting, second order effect.
Morbid thought of the day. People are always going to choose to ride motorcycles, right? Like you can't stop them.
Yeah. Those ones are like insanely dangerous. So a couple of quick thoughts on crypto and AI. I think, long term, we're going to have a world of billions of agents, and the natural way for them to interact with each other financially is blockchain. I actually think in the short term, we've probably already seen a little bit of suppression of crypto prices because of the rise of AI, because the amount of investment dollars going into AI right now is just insane. And like these build outs are unbelievable. The one announced project with OpenAI and a few others is like planned to be a $500 billion project. There's lots of others like that. The amount of money going into that industry is gigantic, should be gigantic. But that is less investment dollars going to every other industry. And I think crypto, in the absence of this like super boom in AI we've had over the last couple of years, I think crypto prices would probably be a little higher than they are. Long term, they're really synergistic, but short term, I think it has, maybe crowded out crypto investment a little bit.
Got it. Okay, listen, I'm sorry, we're gonna have to cut this a little bit short because JF is telling me he's got to go. But listen, next week, are we going to be? You guys have been doing a lot of stuff with Bitcoin recently that has been really interesting. Are we going to have the Satly guys on next week? Is that the plan?
Just Excel.
Got it. Awesome. Okay, so we're gonna have an awesome guest next week to talk about a Bitcoin L1 that's going to be launching relatively soon. I've messed around with it myself. It's really fun and very slick. It's I think definitely one of the more exciting things I've seen kind of launching recently. And
I'd actually like to aspire to have a bigger Bitcoin talk, like sort of
yes.
like Bitcoin off of Bitcoin on Avalanche, Bitcoin on other chains. Like, what does that ecosystem look like? Because I think what's clear is that. This is going to make people sad, but I think it's clear that Bitcoin is sort of the winner. And this is an asset class, at least right now, that has a lot of demand for it. And I think it needs to develop in DeFi, and it hasn't yet. So I think that's like the greater topic of next week, with Satly specifically as well discussed.
Yeah, that does not make me sad. But Bitcoin going up makes me very happy. I hope it goes to 500,000. I think everyone eats if that happens. So great. So, okay, we didn't really mean to talk about Tesla the whole time. We had a bunch of topics we wanted to discuss, but that's fine. Interesting conversation. Next week is going to be more centered around Bitcoin and in general, and also about this cool project with Excel. So hopefully we should have a lot of fun next week. Okay. Thank you, everyone, for joining. Please reach out if you ever want to, talk about that. Want us to talk about anything specific. And thank you for watching. Chat with you guys soon. See you.